Good morning. You're watching The Market right here on 18 Hour, and it's the day after the big sell-off that shook off D Street. In fact, we had the biggest one-day fall that we've seen in about 7 months. It pegged us quite a bit back. Having said that, from when the Israel-Hamas war took off, we're still defending that low, that of 19,330 thereabouts. So yes, we are below the 100 DMA. For the first time in 5 months, we've seen quite a bit of loss coming in. And the mid-cap index as well is getting a little bit shaken off because we're already at those August end lows. So yeah, even for the Sensex, we've had the lowest close in about 4 months. The big question, of course, is things are much settled overnight while we were away for a trading holiday on account of the Shera. So it's some bit of respite, at least that is what the GIFT Nifty seems to be indicating this morning.
So Ayesha, look, what happened on Monday was actually brutal for the mid and the small cap stocks. It's like saying the back of the mid and the small cap space was broken. Now, nobody is surprised that the selling in a sense has emerged, and selling has emerged at a time when global cues in a sense have been slightly sticky, but everybody is surprised with the quantum. Now, what happened on Monday? Well, it appeared when the selling was so intense that there would be a very large institutional selling. And let's first establish the quantum of selling. That's the kind of selling what we have seen. 3 to 5% decline in 1200 stocks, 5 to 10% decline in 650 stocks, and a 10% decline in 36 stocks. We're looking at the broader market here. So that's the quantum of selling what we saw. So I'll first address the mid-cap space. Now this quantum of selling is not unexpected, but the composition of stocks, I think, were very universal in nature. So market did not differentiate between good and the bad stocks. As you walk into trade this morning, the bulls certainly will breathe a sigh of relief that Monday's selling was not in a sense ignited by large FI selling or DI selling. And thankfully, global cues are calm. They've not reversed, but they are calm, which means that you may see perhaps a contained move in the market. But in my book, the best strategy in this market, Ayesha, is that you just wait it out. And I continue to maintain that no action is the best action in this market, because you may be having some green on the screen in terms of the global setup, but I don't think the global concerns about macros, about the geopolitical concerns, the spike in crude, we are not out of the woods. So why do you want to buy the first fall? Because you want to buy when there is
more meaningful.
When there is visibility or when there is a valuation comfort. So my suggestion and my view would be that you do not want to jump in right now just because markets have fallen. They will become attractive after a one-day carnage. Next couple of days, we'll know which way global setup is. If the global setup is good and supportive, then you can obviously relook at the market. But right now, I think you should preserve capital, keep the gunpowder dry. This market is finding resistance at the higher level. The leverage trades, in a sense, are reversing in the mid and the small cap space. So the time to do cherry picking is not in the first fall. Time to do cherry picking is then when everybody is throwing up stocks, so when valuations are attractive. So I don't think we are there yet.
Okay, fair enough. So despite that fall that we saw in the broader markets in particular, wait it out before actually dipping in. Let's also get in a sense as to what the global setup looks like this morning. You've got the major averages on Wall Street, which did manage to end in the green. There's been a lot of strong corporate earnings as well that fueled this move. So that's how Wall Street wrapped up. You've got the Asian markets. It's very mixed this morning. There's data from the Reserve Bank of Australia's monetary policy decision that's being watched out for. And the indicators when it comes to the US, the Treasury yields, they have become steady after slipping back below that 5% level. That was close to a 16-year high. So it crossed that level for the first time since 2007 and now seems to have retreated. And not just that, the price of Bitcoin, by the way, briefly topped 35,000 for the first time since May 2022. There's been positive sentiment of the Bitcoin ETF, and that perhaps led to that move. So just going by the rest of the globe as well, checking in on sentiment, and Nikunj, it seems like it's okay this morning.
It's okay this morning, but it's not great.
No.
And okay could become, it's sticky.
Yeah.
It's unpredictable. Now we may breathe a sigh of relief and say that, okay, the bond yields have not stayed above 5%. Bill Ackman, one of the biggest bond bears, they've covered their short positions. That is a clear indication that some of the global bond market callers and some of the smartest investors who mastered the art of going short, they're covering the short positions. But since the global environment is sticky and crude exactly is not moving the way you would have thought, you cannot call that right now. The global macros would be hard to predict. If global macros are hard to predict, that will have a sense and that will have impact on the flows per se. So while globally between Monday and Wednesday morning, if you just map the last 48 hours change, thankfully no news development, nothing scary and ugly, and things are on the right side of the bulls. But I don't think you can say that convincingly that we could be in for more green on the screen, because I think volatility is back and the mood in general is not risk on, it is actually risk off. It's an evolving situation which will have impact on the way how risk assets would adjust, and for me that is the more meaningful part. And that is what I'll go back to that same point. You should not be in a hurry to buy the first fall. If at all, doing nothing I think is the best strategy. And the first real canary in the coal mine for me would be what will happen to the risk assets the next couple of days. If risk assets they start crumbling, then you want to stay away. If risk assets they stabilize, then we should take a fresh stock. But just because we've seen a bad Monday does not make it conducive for stocks to go up. See, Ayesha, the large cap stocks oversold, so you will get a bounce. Whether you get it today, whether you get it later in the second half of the trade or tomorrow morning, I don't know. A tactical bounce is coming. So you have to examine that what happens after that. And typically when you see a carnage in the small cap stocks, it's going to linger for some more time. It will get over early, but it will linger for some more time because that space had almost become obese. It had become Humpty
The fall
Dumpty.
has just started.
Exactly.
I mean, on a net basis, we're still outperforming the broader markets as opposed to what the large
When I
caps
looked
are
at the
doing.
data on Monday evening, and my first question, becha kaun? I mean, FIs were buying, DIs was buying, becha kaun? Obviously, there was retail, and obviously there was some positioning, margin positioning which have changed, and that typically does not stop in one day.
Yeah, absolutely. Okay, well, lots to track, but you've got earnings as well, and the important one, of course, is going to be Axis Bank, purely because of its positioning amidst the other non-performing large private banking names, cases in point being Kotak as well as HDFC Bank. Look out for the credit costs because we're anticipating that they are going to remain under control. The margin pressure, what they expect going forward, cost ratios, guidance, and of course, the growth from Citi acquisition are some of the key monitorables that we're going to be looking out for, as is the case for Tech Mahindra as well, especially in the light of what the other large cap IT majors have done. I mean, there is a dividend expectation as well, but the demand in the telecom, the BFSI sector, new CEO, leadership, the kind of rejig that they're anticipating going forward from here, the Comviva acquisition scale up, headcount, deal trends, all of these monitorables is something that we're going to be looking out for. But I think Axis is going to be more important. I mean, for IT, the street already knows what's going to happen.
See, Tech Mahindra is a special situation stock, so you cannot rule that one out. Largely change of CEO. But has the change of CEO so far given any kind of great visibility in terms of where the earnings are likely to move? So far, the answer to that is no. Look at Tech Mahindra. Tech Mahindra in this year actually has done much better than what rest of the IT pack has done. So there is a bit of a hope trade which I think is there with Tech Mahindra. Let's hope that hope translates into real delivery. So Tech Mahindra, purely looking at the organizational restructuring, I think those numbers would be important. Then you got Axis Bank. If HDFC Bank, IndusInd Bank, or if ICICI Bank numbers are anything to go by, I guess for Axis Bank, it's going to be a decent quarter in terms of the banking numbers. Markets would like to know that, okay, where is the credit card business happening? How things are moving higher? What is happening to the cost of credit there? I mean, how things are moving on the cost to credit front. Then how exactly things are moving in terms of the insurance business. So there is a lot more news and a lot more guidance which essentially markets are expecting from Axis Bank in this quarter, largely for the non-banking business rather than the banking business. The banking business, that's a big piece for Axis Bank. That by and large for the sector per se and for the market standpoint, I think is stable. So can Axis Bank do what, let's say, ICICI Bank did 2 years ago? There is a case for it. So I think I was of the view that HDFC Bank will make a comeback post-merger, but it has not made a comeback. But you look at in the same vein how Axis Bank and HDFC, IndusInd Bank have done. So the pecking order in the banking space, I think, is changing right now.
All right, that's the view coming in on results as well as the overall banking space. But let's also get in a closer sense as to what the outlook is when it comes to the global commentary. We've got Vinny here to sum it all up for us. Vinny?
Good morning, and let's start with the first commentary that has come in from JP Morgan Chase's CEO, Jamie Dimon, and he's actually warning about the dangers of locking in an outlook about the economy. He said, prepare for the possibilities and probabilities and not calling one course of action as of now. Now, he said that he's never seen anyone call it, and the head of this largest bank is talking about assets that he highlighted in terms of Saudi Arabia as well. Furthermore, he said that he doesn't think that it makes any difference whether the Fed actually hikes the rates or waits for one more quarter. That is something that is not going to be in terms of a major difference, he believes. But yes, that's the factor that he's keeping an eye out on. Next commentary we have is from Peter Schiff in terms of Bitcoin that he said is now trading at $35,000. And what he believes and what he's actually seeing is that, he's surprised that that the Bitcoin speculators are actually overestimating the demand for the new Bitcoin ETF. And it's hard to believe that with so many existing ways to actually have exposure to Bitcoin, this is what they're choosing for as well. So that's the commentary coming in from Peter Schiff in terms of Bitcoin. Then we have the commentary that is coming from Bill Ackman, an important one today that one should watch out for as well, because what he said that he's covering his short bet on US Treasury, saying that there is too much risk in the world to remain short on bonds at the current long-term rates as well. And after that we've seen a reversal coming in the bond move as well. So let's keep an eye out on that. Lastly, we have Coca-Cola CEO James Quincy, who's highlighting in terms of how they think that marketing is actually an investment and that could drive the top line and the bottom line going forward. And obviously we had commentary that came in from them in terms of the India commentary as well, where they said double-digit growth in terms of volume and top line growth is what they're expecting from India going forward as well.
We leave it at that. That's the global commentary coming in. Fortunately, it's a decent handover from the rest of the globe, much unlike what it was Monday when we were winding up for trade before the market holiday yesterday. But on that note, let me also bring on board Kunal as well as Naresh and find out what they're making of the charts right now. Kunal, hi, morning. A scary Monday. Halloween came a little earlier, sub that 19,300 level. What happens next?
Yeah, good morning, Ayesha. So it was a tough Monday for the markets because after quite some time, we managed to see the mid-cap in the market being, going into a very savage kind of a correction. We saw the Nifty coming back below the 90,300 mark, and I think that's a more critical point because if we sustain below this 90,300 mark for the next couple of days, then the pressure on the selling side could remain a bit more accentuated. But on the other hand, there is sort of a solace that not too many larger cap names, the likes of HDFC Bank, for example, they're not seeing an incremental kind of a damage for themselves. There have been mild corrections into these stocks, but then I think the action is more specific towards the mid caps and small caps, at least in terms of selling. So we'll wait out for another couple of days how the index pans out, whether the Nifty sustains below this 19,300 mark. Many of the global markets have gone through a mild bounce for themselves. So we'll have to see whether this is a phase of a bounce which we can expect for the indices or possibly a bounce to sell into.
Right. Naresh, hi, morning. You think it's looking weaker for the mid and small caps as opposed to the Nifty?
So for the first time in the last couple of sessions, we've seen a breakdown in the mid-cap index. We've not seen a similar breakdown in the small-cap index. The last shakeout we saw back in September, we saw 4-5% downtake on the mid-cap and the small-cap indices. That low has been taken out in the mid-cap indices. So, and both these indices almost went back to the same highs of the last previous month of September, almost back to the all-time highs. So, kind of a first indication of some bit of a correction. The risk on the downside has increased, wherein the shakeout can turn into a correction, wherein it could be down 8 to 10% from the top. So for now, in this case, one needs to wait it out. Let us see if we can see follow-up selling around these levels, or we again get into a sideways consolidation. So at this point of time, one is better off waiting on the mid-cap and the small-cap indices. We could see selective stock action on the results for the next, say, 1 month in the mid-cap and the small-cap space. So overall, the time is to wait it out. Watch for price action over the next at least 8 to 10 sessions and then take a call.
Let's nail it down to some individual stock recommendations. Kunal, you were saying that it's more important to map out what's going on with the broader markets. In light of that, what's the stock-specific strategy?
I'll go with a defensive strategy on the long side. HUL remains to be a buy. The stock has already corrected more than 15% in the last 3-4 months. So expecting the stock to get into a mild pickup, at least over the near term. Would suggest a buy with a target of 25.70, stop loss at 24.50 mark. And second would be a buy in ICICI Lombard. In fact, many of the insurance stocks are actually looking very attractive. Many of these stocks are perched at a breakout level for themselves. So this could be an interesting turnaround events for insurance names. Picking up in ICICI Lombard, targets of 1440, stop loss 1380.
All right, let's find out what the strategy is when it comes to Naresh. Naresh, your top bets?
So being defensive, we are a sell and a buy, both from the large caps. First is a sell on Titan, overbought in the near term, showing first signs of a possible top out, a strict stop loss at 3,300, target price of 3,000. Second is a buy on Hero MotoCorp, which has been trying to make a multi-year breakout move. Has made a strong base around that 2,900 to 3,100 mark. A lot of consolidation done, tried to make a move up, saw a correction in the markets, could again go up higher from here on. A good risk reward here, stop loss at 3,100, target price of 3,400.
Okay, thanks very much for running us through all your top recommendations. Let's move right on then and put the spotlight on Torrent Pharma, and Anisha joins in to give us a sense of that. And Anisha, walk us through what exactly the brokerages have to say regarding the Q2 numbers.
Yeah, the numbers were largely in line, but of course the talking point for Torrent largely remains that impending acquisition that everybody is talking about. So there were a lot of questions in the con call regarding the capital allocation. So that of course took the spotlight, but let me quickly start with the numbers and run you through that. The numbers were broadly in line with expectation. The revenue growth came in at 16%, largely led by the India business, which continues to shine quite well for them. So that was high by 18%. The Brazilian unit has also performed quite well actually. The growth came in at 36% there. So there was some spillover, of course, that happened from Q1 and there was some bunching up. But nonetheless, the commentary on the outlook for the Brazilian business as well as the Indian business continues to be fairly strong for the company as well. Margins managed to expand as well. We have seen the margins come in at 31%, and that's the reason the profitability was also high by 24%. Germany also did quite okay for them. United States or the US business continues to be under pressure a bit. It was down 15%, and there they're talking about that the price erosion has now become single digit. So they're not still talking about that price erosion has completely stabilized, but yes, there are initial signs of that, and that's something to be positive about. Now, in terms of the capital allocation, they of course did not directly name Cipla, but they did say that they are likely to look at M&A opportunities. The balance sheet is strong for them. They are talking about how they have 3x net debt to EBITDA, and they are okay on the balance sheet to kind of take a huge acquisition as well. But they'll be very careful about the cash accretion that can happen on account of that acquisition. They are comfortable doing M&A in India versus international, and that's where obviously Cipla comes into the picture. But Nikunj, that was expected, right? I mean, obviously they won't directly name Cipla, and Cipla itself has hit a few roadblocks in terms of the valuations, etc. But the street will still try to read through in between the lines.
Look, I'm going to read a quote from Jefferies, and they said, the management has said it would remain disciplined about the capital allocation, which may not exceed 3x net debt to EBITDA, which might not be enough to acquire the controlling stake in Cipla. There's one more report which I've read, which I think mentions pretty much the same thing, that if they have to acquire Cipla and if they're giving a guidance of net debt not exceeding a threshold of 3x, that means the Cipla acquisition is unlikely to happen in this balance sheet. One. B, we've reported at ET now, Anurag Joshi, he's been indicating, and he in a sense has been reporting from last 2 weeks, that the Cipla deal is not an easy deal because of right now there is no decision which the promoter family, which is the Hamid family, have taken, and I think the Economic Times also reported the same, I think on Monday or yesterday. So looks like the Cipla deal is not going at the pace at which markets were anticipating or expecting. And if you read in between lines, I mean, if you count the tea leaves, maybe that's a hint which is also coming from Torrent. Independently, if the Cipla deal goes through, well, in the near term, it of course will have a problem in terms of where the leverage would move, how can they really consolidate this kind of a large acquisition, what kind of structure are they following, because they've already given a net debt guidance. If the deal does not go through, let's assume that Torrent tried something, the deal did not go through, then independently, how do you value the business? Well, independently, I think Torrent is doing great. But valuations for Torrent, something like 30 times 1 year forward, 20 times, 25 times 2 year forward, is not exactly very cheap. So I think Torrent is a stock where in the near term the news volatility could be high, valuations are not that attractive, but I think it would be a steady compounder going forward if you take a slightly longer term frame, because the triggers in the pharma space, at least in the short term, I think are largely with, let's say, a Sun Pharma or a Glenmark because of the repair of balance sheet, or even for that matter Lupin, because the product profiling in the US market is strikingly different.
Okay, and the other stock being Jubilant, surprising as it may be, we're anticipating a same-store sales growth decline.
Yeah, but that's been the case for the last many quarters for Jubilant, and we have seen quite a sharp EPS downgrade after the Q1 numbers as well. But the big question is, will that decline be arrested in Q2 itself, and from Q3, will the commentary change? Because that will be the key factor for Jubilant going forward. This quarter again, the street is expecting that the SSSG or LFL as they call it is going to decline. The street estimates are quite varied. There are people who are expecting decline to the tune of 1%, and it goes all the way up to 7%, when HDFC Securities believe that SSSG can actually fall by as much as 7% in this quarter. Last quarter, we had seen a decline of almost 3% on a consolidated basis, 1.3% for Domino's. This quarter, overall on revenue, we'll see a growth. A growth will come of almost 4 to 5%, but that's because they've opened a lot more stores. So the Domino's store addition has been quite strong this quarter, and that will drive the revenue. Margins, however, might remain under pressure. Yes, raw material prices have come off, so we might see a tad bit of improvement as far as the raw material factor is concerned, but the operating leverage itself is negative given the fact that, as we talked about, the SSSG would continue to decline. The big question, Nikunj, of course, is what's the commentary going forward, because of course, we were talking about how World Cup, etc. is likely to benefit, but the stock trades at 75 times. It's no way cheap.
See, Anisha, the problem for Jubilant 2 quarters ago was who moved their cheese. I use this phrase, and I think it is still the problem. Why cheese? Because milk prices have gone higher. Cheese is an important raw material, and I don't think that concern for Jubilant Foodworks per se, I think is behind us. It's a stock where there are multiple raw material challenges which I think are evident. And in the near term, those challenges are not going to abate in any kind of a hurry. Also, what was the USP of Jubilant Foodworks? The USP of Jubilant Foodworks was always that, look, 30 minutes netto pizza free. Now, that entire experience of home delivery, surely Swiggy and Zomato have challenged. So earlier, if you wanted to order a pizza, the only option was Jubilant Foodworks. Now that, in a sense, is getting challenged, and that's no longer the factor which is at play. So it's an expensive stock where raw material pricing exactly are not there. The management will have to come back. They will have to rationalize some of the same stores. They're moving outside and they're looking at expanding their range. Those are small businesses which need to scale up. So hopefully somewhere in second half, hopefully somewhere in FY25, you'll get a sense that how raw material prices are digested. Are they getting pricing power back, and what is happening to the non-core pizza business, and are they able to really build on some of the other businesses? For example, the chicken delivery business, the Chinese delivery business, the biryani business. If they're able to build it up, then it becomes a very different sum of parts story. But as of now, it's a business where the Zomato and the Swiggies of the world are challenging the supply chain. They've not been able to build up on the supply chain excepting Jubilant Foods. And frankly, if you ask me, the raw material pricing for them, I think has been a struggle.
Okay, those are two stocks to look out for. That's Torrent Pharma as well as Jubilant Foodworks. Anisha, thanks for flagging off both. Right now, of course, the implied open for the GIFT Nifty is indicating at least an arrest of the fall from Monday. So it's just about marginally higher. Let's see how the day pans out. For now, we're going to take a very quick break.
Welcome back. Still tuned into the market. Time to bring on board then Sanjeev Bhasin, who joins in on the show. And Sanjeev, today is a special day because you turn a year older, hopefully wiser. So many happy returns of the day from the entire ET Now team. Wish you a very happy birthday. How are you celebrating?
Thank you so much, Avanne. Thank you for this, for your good wishes. And yes, I hope I turn wiser. Well, there's a small party for my 60-year-olds planned tonight, and we are going to celebrate the comeback of the Nifty. So I'm very sure today the Nifty turns the corner, and you should be looking a huge green close. That is what my wish is, and that is what will happen by the end of the day. Thank you, and we wish all the viewers also that this is the day you should be looking to build your portfolio and take this weakness to be a buying point.
Wow, I love how you intertwine the markets fully into your birthday celebration plan. But all the very best and hope the celebrations are wonderful. So, Sanjeev, given that you're so optimistic, what about the carnage in the broader markets? Are you not at all worried with that 3% fall, 2.5% gash?
So, Avanne, that was something which was very much on the cards more because of collateral risk and nearness to the expiry and so on. But you know, take it with a pinch of salt. Yesterday, very big investors have covered their shorts on the bonds. They feel the bonds are overpriced. The bond yield, in fact, if it breaks 4.65, you will see the dollar fall below 102. The dollar has not participated in this rally, and people are missing that point. The US has a debt of almost $33 trillion. It takes $1.5 trillion just to roll over. So even additional cost for them is pinching. Secondly, Bitcoin hit 35,000, the highest level in 2 years. And I think this is the perennial moment where capitulation is almost through. So I am not so gung-ho on the mid cap, but I'm very gung-ho on the large caps. I think this 19,100 to 300 is a very big range where you will see huge amount of pent-up buying, and it will be the large caps which will drive the market. So overweight the Nifty and the bank Nifty at this price. You've got yields falling, you've got dollar weakening, you've got oil falling. I think it all bodes well for financials and industrials to lead the market.
All right, so let's get stock specific then and getting your take on the banking space. We were just this morning talking about the pecking order within the large cap banking space changing. What would be your pecking order?
So ICICI stands out. I think numbers were fairly ahead of all street estimates. We will wait for Axis today. ICICI takes the cake. I think HDFC now at these prices is one of the banks which is poised to leave the bank Nifty higher. We've corrected from 46.5 to 43,000. These are very strong levels, and plus you are looking at incremental growth over the next 2 quarters being very strong. And I can add an SBI card as a wild card because I think credit card spends, depending on the seasonal part of the festivals, the SBI card will report very strong numbers. So in the banking, these are the 3 names. You can add a mid cap like an RBL bank, which is actually seeing 20% growth, and where I think the stock can definitely outperform.
Okay, there you have it. That's the view coming in within the financial space. But let's put the spotlight on the earnings. ICICI Securities has actually released an interesting report on the results so far, telling us which are the sectors showing resilience and the ones that have been weak. What are the trends emerging? We've got Vinny here to share the details. Vinny?
Good morning, and talking about the Q2 FY24 numbers so far. Now, ICICI Securities is talking about the profits first, the free float profit for the NSE 200 excluding HDFC Bank. That has seen a growth at this time so far of 24% during the quarter. And obviously in terms of cyclicals like an NBFC banks, industrial, discretionary consumption, they have provided robust business growth is what the highlight is coming in. So good growth seen in these 4 sectors. Other than that, cost pressure, that's been limited, resulting to a strong profit growth for most of them. So limited cost pressure, improved profit growth, while what the other highlight is coming in, whether you look at stocks like a defensive stocks, which is related to IT and FMCG and insurance space, they have delivered a muted growth this time around. Most of the companies so far have delivered muted growth in these quarters. Now, also in terms of key macro trends that one has actually seen coming in is one, IT hiring, that has been weak. Rural demand, not a recovery that is seen coming in across sectors as of now. So weak rural demand. Robust capex plans, that's what most of the companies have highlighted as well. Higher end, discretionary spending, that's there. There's NPA, systematic NPAs, that is a focus coming in on as well. Moderate cost pressures coming in, as well as in terms of focus is going to be on new technologies such as digitalization, generative AI. Lot of commentary coming in on that front as well, and even in focus coming in on EVs as well. Now, most of the stocks within their universe so far thereby are seeing a limited reaction coming in, and that's the breakup that you can see in terms of the earnings beat and what is muted as of now. So most of the earnings we are seeing has remained quite muted or below or miss expectations. Only beat is coming in the lowest levels in terms of the Nifty. Only 3 Nifty companies have beaten the estimates of the street so far.
Okay, Vinny, we'll leave it at that. And Mr. Bhasin, once again, wish you a very happy birthday, lots of prosperity and good health from all of us.
Thank you, Ayesha. Thank you very much.
And, since we can't give you anything other than our best wishes, let's have you give something to the viewers. Let's have three stock ideas from you, not for the short term, but for a longer haul.
Yeah, so I'll go with three stocks which I also own, which we made our clients buy as a disclosure, and they are all three in their own respective, sectors. First will be I'm very bullish on the distribution segment, and I think mutual funds, AMCs are going to rule the roost. So ABSLMC has not done anything much as a stock since it listed at 750, but at 430, I think it is the third largest AMC in the country. It has a lot of it going for it. So ABSLMC, AB Sun Life Asset Management Company at 430 is my top pick. You could look for a target at 650 by the next year of my birthday. Second would be Devyani International, which I have already disclosed that in the QSR space, this company is doing extremely well. So it owns the franchise of Kentucky Fried. It owns the franchise of Pizza Hut and Costa Coffee, which are gaining market share at the fastest pace. This stock is headed to 300 and beyond, maybe beyond 350 by my birthday next time. And last but not least, a stock which most will hate, but I have fallen in love with it. That is Idea. I think ARPUs are rising. AGR pricing is being reconsidered. They've got a respite on losing of market share. And fourthly, 5G is boding very well for them. Also, there is on the anvil to raise capital. Idea can be a doubler from here, but take it with a little bit of risk because this stock has always flattered to deceive. But I am very, very sure Idea can be a doubler from here by my birthday next year.
Wow. Kunal, do the charts read the same? 20 plus levels on Idea in 1 year's time?
Very difficult to forecast given the kind of markets we are into right now. But I would believe that if the stock breaks out the 13.5 to 14 barrier, that could actually be a good breakout point for Idea. So the point is, as Sanjeev also said, that the stock tends to deceive a lot. There have been a lot of earlier breakouts. There have been previous mild trends which have begun for Vodafone Idea, but it's not resulted into any kind of a major rally or a very strong multi-month, multi-quarter uptrend for the stock price. That's one of the major reasons why I would just probably keep it on the sidelines and wait out for the breakout about 13.5 levels.
Okay, that's one of the stock ideas coming in from Sanjeev Bhasin this morning. Vodafone Idea, where he believes it could be a doubler in the next 1 year's time frame. But let's now put the spotlight on how the credit card spends for the month of September have been. Ayesha is here with all the highlights.
Well, yes. In fact, credit card spends saw a decline in the month of September. Credit card spends in the month of September declined by about 4.2% on a month-on-month basis after a growth of 2.7% that we had seen in the month of August. Let's also talk about credit card additions then in the month of September. That was strong on a month-on-month basis. Credit card additions, or rather new card additions, stood at 17.4 lakh in the month of September as against 14.1 lakh that we had seen in the month of August. So credit card additions in the month of September have seen a strong growth on a month-on-month basis. New card additions on a month-on-month basis was supported by strong growth across all players. New card addition was slowest for SBI card amongst all private as well as public sector insurance players that we saw. Credit card addition for ICICI Bank saw a growth of 2.3% on a month-on-month basis, which was followed by IndusInd Bank at 2% and RBL Bank at about 1.9%. Let's also talk about market share position in the month gone by, where HDFC Bank and IndusInd Bank gained market share in terms of credit card spends in the month of September, while SBI, Axis Bank and ICICI Bank lost market share on a month-on-month basis. Let's also talk about some figures then. HDFC Bank market share stood at about 26.5% in the month of August, and it improved further to about 27.2% in the month of September. This was followed by SBI, where market share stood at 18.4% in the month of August, but it deteriorated to 17.5%. So credit card spending on a month-on-month basis did decline, but new card additions were strong on a month-on-month basis, and this was across players.
All right, I was out. I was not in the studio when Ayesha and Avanne wished Bhasin Saab happy birthday. So Bhasin Saab, your birthday calls for a celebration, and the last time when we celebrated was when you came to ET Now studio. So you are not in person, otherwise we would have done the bhangra again. But जब बसीन साहब का भांगड़ा, जब बर्थडे तो भांगड़ा तो होना चाहिए. बसीन साहब थोड़ा बल्ले बल्ले टीवी पे करो जी.
थैंक यू निकुंज, जरूर बल्ले बल्ले करेंगे. अगले हफ्ते आ रहा हूँ मैं फर्स्ट को.
अरे पर बर्थडे, अरे सर आज बर्थडे है, आज के बल्ले बल्ले दोबारा कर लेंगे. बर्थडे के दिन तो दोबारा करना चाहिए ना.
आपके साथ तो बल्ले बल्ले है, आप मेरे से अच्छा बल्ले बल्ले करते हो. तो निकुंज, cheers and thank you, and keep the spirit. Next week we are rocking, so it's just a matter of days. Take this with a pinch of salt. You can't have everything in the macro now turning positive, but the sentiment weak because of these collateral risks. So मुझे
अरे क्या बर्थडे के दिन बसीन साहब, आई वाज थिंकिंग यू विल टेल अस अबाउट हु फैमिली इज कमिंग, केक इज कमिंग. मार्केट तो चलता रहेगा सर, मार्केट तो रोज कर दे. बर्थडे तो साल में एक दिन आता है. व्हाट आर द प्लान्स?
बिल्कुल.
केक विदाउट शुगर.
60 plus friends are coming from my batch, and a lot of them, and my family of course is there. I will miss my daughter in London. She will do a video call and wish me. But it's cheers all the way, and we'll celebrate this next week definitely in Bombay with you and the team.
You know, Buffett has made 90% of his wealth after he turned 60. So Bachin Sahab, you're going there.
It's just the start.
Nikunj, more than me, I would wish that all ET Now viewers and the people who follow me, the investors, they make money, because this is the time for India. You cannot have it better. Don't talk about expensive valuations, which everyone does. This is the time to put your money where your mouth is. India is shining. So more than anything, I wish the investor community to make lot of money and to make equity an asset class, which has been missing for decades.
SIP is up 10x in 10 years. That just tells you the compounding rate at which SIP is growing. So Bhasin Saab, if this entire trend in SIP is real, then why AMC stocks are not really flourishing? You look at Birla HDFC AMC, UTI AMC, or even for that matter, our good old AMC, which is, so Birla is under pressure, HDFC is under pressure, UTI is under pressure, Nippon is under pressure. All 4 AMC stocks are under pressure. Why is that?
Well, it's a matter of choosing the right basket, and I agree. But you will only find value, and the uncovering of that value will take time. How can you miss out the woods for the trees? In fact, these are going to be consistent well compounders, just like brokerages, just like insurance, just like intermediaries, which are across the board. Because the market cap and the participation is meaning that they are going to be making money on an everyday basis. And as the SIPs get louder and bigger, you will only see compound effect. In fact, these are the best long-term wealth creators. Rather than an FD, I would put money in an AMC, in an insurance, in a brokerage, because I know they are constant compounders. So I am very, very bullish on ABSL, AMC and that basket. But I would stand out with ABSL, AMC because of the new product launches which they've come out with. And I think the underperformance has now more or less mitigated. You will see that in the quarterly results. And don't keep a window of 3 to 6 weeks or 3 months. Keep this as a 5-year window. You will see this as a very, very big wealth compounder.
Nuresh, in this market mid-cap fall, where are you confident of going against the price action? You would say, look, I don't care about Monday's price action, but I want to focus on the coming Monday, not the Monday gone by, where I think the stock has ability and has a trend where it should be higher than where it is.
So a few sectors which have come up in the defensive names. One is, say, look at all the names in the financialization pack, which is where you look at brokerages, where you look at AMC. So Motilal Oswal is one. Then another play is CDSL. That looks promising at current levels. Then there is ratings, which is where Care Ratings as well as CRISIL looks interesting. So these are names where downsides could not be large, but could be in a structural trend going forward. And a lot of these names have created multi-year breakout. So Motilal Oswal has done nothing for the last 3-5 years. So at 900 to 1,000 rupees, this is a good zone where it could do well. Same is the case with CDSL, which has made a decent recovery, but is now shaping up for a breakout. And ratings as a sector, all the three look interesting: Care, ICRA, and CRISIL. So these are names where you have a lot of defensive nature in terms of the downside. So that is one. And the third one I would be watching out for is agro-related, which is where we are seeing a breakout in Kaveri seeds or a lot of agrochemical stocks which have gone through a good enough correction. So something like a UPL could be bottoming out over the next, say, a period of next 1 to 2 months. So at 550, 580 levels, that could be promising. So looking at either sectors which will not see a much major correction, those who have not rallied, and could slowly and steadily move up. So this is the basket I'm looking out for.
Sanjeev, before we let you go, given that we are in the throes of the festive season, some stocks that you believe are likely to benefit on the back of the festive season sales going higher could be within the auto, consumer discretionary, across the board?
Is that for me?
Yeah, Sanjeev, for you.
So I think, like you just pointed out, credit card businesses are very, very attractive. There will be a large amount of spending there. You've seen the likes of Paytm, Zomato do exceptionally well in the fintech basket. I think in the auto space, Mahindra is ruling the roost and Maruti could be the dark horse, but these stocks have already run up. And as a corollary to that, the Motherson Sumis and the Exide of the world, because of the EV transition, is seeing a lot of traction. But I would take it to be banks. I think banks are well poised. They are seeing, credit expand at the fastest pace ever, and volumes are making up for the little cost of money. The RBI himself has sounded that they are cautious on bond yields rising, which should not be in sync because inflation has moderated. And I think the RBI is going to be on hold along with the Fed for a very, very long time. So I don't think any incremental damage is there regarding the monetary policy. And I think banks' discretionaries are going to rule the roost. Here I would add a stock called Marico. I think it has a perfect portfolio. 1 quarter of weakness means that this is the time to buy this stock. This stock is a quality stock, which I think can be a very big outperformer once the festivities start to gather steam.
Right, Sanjeev, great to have you on the show, and here's wishing you happy birthday once again from all of us. Have a good day. Let me also welcome on board Pankaj Pandey then and find out what his market view is right now. Pankaj, 2 important earnings today, both Tech Mahindra as well as Axis Bank. And let me start off with Axis Bank. Given what we've heard from a Kotak, from an ICICI Bank, to an HDFC Bank, of course, and IndusInd, what is your anticipation of what Axis Bank could deliver?
Hi, good morning. Thanks for having me. You see, on Axis Bank, from a valuation perspective, valuation looks okay at about 1.8 times FY25 basis. I think overall, our sense is that we would expect some kind of an NIM to sort of decline. And if it remains in the range of, say, 10 to 15 odd bips, then I think I would consider the number to be sort of positive. I think any extra or more than that decline, I think, would be sort of negative. But I think our overall sense is that one needs to watch out for the NIM trajectory for the bank. And the rest, I think most of the other variables are looking to sort of or are expected to be okay. On the Tech Mahindra, given the fact that we have seen most of your tier 1 IT names sort of disappointing, I think except for order booking, none of the variables have actually sort of been good. And Tech Mahindra is already sort of undergoing transformation. They had previously, they were high on in terms of M&A-led growth. I think that probably we would expect probably a shift from that side. And that would again mean that you would continue to see numbers as well as growth below subpar. And I really do not think that near term we would expect an outperformance from Tech Mahindra, despite the fact that this is one of the cheapest stocks within the tier 1 names. I think one needs to watch out for what is the sort of a future plan of action they, given the fact that they've got a new CEO. So I think that holds the key rather than the current quarter numbers.
Pankaj, FIs were buyers on Monday, DIs were buyers on Monday. Mid caps were down, small cap stocks decimated. So the question what we are asking everybody is, who was selling? Was Pankaj Pandey selling? Who was selling? Becha kaun?
So Nikunj, I think what one needs to see is that whenever we see softness in the market, the intensity of fall is definitely a lot more higher in, say for example, small caps. I mean, historically, if you look at last 10, 15 years, typically in a large cap, every year you will see 10 to 12% kind of a correction. For mid caps, that is somewhere in the range of, say, 15 odd percent. And for small cap, you see a correction of nearly 20 odd percent on an average basis, with the range being 10 to 35 odd percent. I'm excluding the 2008 odd year. So from that perspective, whenever we see softness, you'll definitely see mid caps and small caps sort of correcting. But we continue to like small caps for a number of reasons. One, I think we have seen the maximum upgrade in earnings for small caps in good double digits since the beginning of this year. Then our sense is that the domestic macros are good for the next 6-7 odd years, which is a very fertile ground for small caps to sort of do well. And the other sense is that when you look at, say, large caps, it's a very narrow space of 100 stocks. Mid cap, again, very narrow space of about 150 odd stocks. But when you sort of look at small caps, the entire rest of the market is small caps. So they were slightly sort of overbought, so which is why we've seen that kind of a correction. But our sense is that if domestic macros are holding up good, we would continue to sort of prefer the small caps. And I think in large caps, valuation look attractive. So some of the large caps are also sort of okay. I think mid caps could be a challenge.
Okay. You know, the one space that is in focus is going to be agrochemical stocks. After the American major FMC has actually cut its guidance once again, citing a challenging environment, expecting the pressure to persist in the near to medium term. In fact, Somit is here with details from that note.
Well, FMC has yet again given a revenue warning. Now, this is for the second consecutive quarter where they have downgraded their revenue and adjusted EBITDA guidance for 2023. Now, for in the previous quarter, they had downgraded by around 14%. That was the revenue cut, and around 12% cut was seen on the adjusted EBITDA front. And this time, they have cut their revenue by around 13%, while the adjusted EBITDA has been cut by around 26% for the calendar year 2023. Moreover, the management has also said that they are seeing significant pressure when it comes to agrochemicals in the near to medium term, and they're expecting the destocking conditions to persist even in the next calendar year, that is 2024. Now, they're observed that the channel destocking is continuing in all regions and they're also saying that the magnitude of destocking that they're seeing in Brazil has been much greater than what they were anticipating earlier. Now, they're also saying that the application of the products are pretty much stable from the growers, but it is the destocking that is going to impact them even in the next calendar year, that is 2024. And they're also initiating immediate restructuring process for operations in Brazil because they need to contain their cost, and because of higher cost, in fact, if you're seeing that adjusted EBITDA has been downgraded by 26%, and now the company is trying to contain this cost going forward. Now, because of this lower revenue guidance, and given the fact that they're also expecting lower revenue for 2024, the companies that would get impacted in the Indian market are firstly it's UPIL, because it's also an agrochemical producer and exporter. Apart from that, there are a host of chemical companies that would remain in focus, like SRF, Aztec Life, Anupam Rasayan, Jubilant Ingrevia, and Navin Fluorine. Now, all these companies are exposed to agrochemical cycle as they supply to leading agrochemical companies like FMC, Syngenta, Edama, Bayer, Corteva, and BASF. And all these companies could also see significant pressure in their earnings going forward.
All right. Pankaj, 3 stocks which you are telling your clients that don't worry about what happened on Monday, don't look at valuations, but just buy them because 2-3 years from now, they could be up 20-50%.
So, Nikunj, what we have been liking is, say, for example, within the, say, small cap spaces, some of the cement companies plus some of the infra names. So, for example, what we are liking is JK Lakshmi Cement, where target price is 840. We have been liking, say, Sagar Cement, where target price is 305. Then we have been liking some of the infra names because our sense is that in the second half, you'll see more of order inflows coming up because up till now, first half has been softer, especially the Q2. So we like the entire lot of, say, KNR Construction, where target price is 340. We like PNC Infratech, which also looks attractive to us with a target price of 460. So I think these are some of the names which we have been sort of liking because we haven't seen much of a price performance. And on top of it, our sense is that you will see better set of numbers in terms of top line growth, plus no major challenges on the margin front, and valuation being okay for most of them.
Well, the GIFT Nifty is indicating that we could be in for 46 points higher, which means this is the implied value. And Kunal, just stay with me here. If I say implied value, what the implied value is saying that when market shut on Monday, Tuesday GIFT Nifty was trading, Wednesday GIFT Nifty is trading, but if implied volume number is anything to go by, looks like at 9:15 when markets will open, it should be up rather than down, right?
Yes, it should be up rather than down.
Let's look at the 10-year paper. On Friday, it had crossed 5%, but today it is below 5%. Crude, it was above $90, 91 and a half. But as we walk into trade this morning, that also is in a measurable manner. So the cues have not deteriorated. You've not seen anything which could be called as a amplification of global bad news or deterioration of global setup. Global cues are measurable. And for me, I think we'll put that Twitter quote out of Bill Ackman, not a Twitter quote, but a tweet rather. You still call it tweet, right?
Yeah.
I mean,
You don't call it X.
No, I don't know. See, retweet has become post. So I don't know if the terminology is changed or not. But it's called tweet, right? Okay, tweet. Bill Ackman's tweet, will put it out, where he's covered his short positions. Why am I bringing it out? Because, I mean, there you go. The economy is slowing faster than the recent data suggests. It's Bill Ackman. There is too much of risk in the world to remain short bonds at the current long-term rates. What is Bill Ackman saying? That American economy is slowing down and we are covering our short positions. And he was very vocal about it, that he was short the long-term bonds, which is the 30-year paper. Now this is, I mean, he's been known for his notoriously short positions earlier this year, during COVID, and a couple of years ago in some of the pharma names. So he understands the short business very, very well. I mean, he's like Soros. He understands the short business very well. So if a short seller is covering the short positions in the bond market, that just makes you wonder that have bond yields really picked out now. Pankaj, how much of narrative change could that be?
So I think in US, every alternate day you hear something different coming out. I think you have Fed policy meeting lined up on 1st of November. While you're continuously seeing data ups and downs, but I think global issues are still sort of lingering too much. And I don't see a definitive trend where things have started to sort of cool off. So from that perspective, global-led volatility, be it driven by higher crude oil prices or be driven by 10-year or 2-year plus, say, even 30-year inching up, or going beyond 5%, I think that is going to remain there and probably we'll have to live with it some period of time, because this time Fed is not expected to hike rates. Even the probability of hiking rates in December is lower. But a lot depends on how the Fed sees, because when you look at from an inflation perspective, 3.7, you're on a positive real rate in US. But that is still, the inflation is still intended or still higher than what they've been sort of looking at in terms of 2% inflation as a norm. So I think globally, very difficult to draw comfort as of now, even with the recent data flows or crude sort of coming down below $90. I think things can change. Things are changing on a daily basis.
Yeah, they are. And Kunal, much like our markets, it's the global markets which are more sensitive to the way the yield actually pans out. You've been studying the charts of the Dow, right? I mean, overnight, of course, there's been a bounce coming in, almost a 200-point move. There are a lot of critical earnings as well coming in. The markets have been reacting to Microsoft as well as Alphabet reports. But tell me, what's the chart for the US equity markets and in specific Dow looking like?
So Dow, in fact, from the June-July highs, when the Dow was, I think, 35,500 to be precise, I think from there, the index has been making a pattern of lower highs and lower lows. Now, the only good part is that so far in the last 1 week of correction for Dow Jones, we've not managed to make a new swing low. And I think that swing low for the Dow was around 32,800, 850 mark. So we are just slightly above those levels. There is a bounce which has happened on the Dow yesterday overnight, so that could probably mean that maybe for the near term we may not have made a new low for the index. And I think on the other hand, if we even manage to surpass about the first major previous high, which is 34,000 mark for Dow Jones, we could be looking at this 4-month, 5-month downtrend reversing for Dow. So we are at a very crucial stage, a sort of a make or break level for Dow Jones. If we don't break below the 32,800 mark on the Dow, then I believe there is a strong chance that we may get into a breakout. And if we break above the 34,000 mark, we've probably ended this 5 months of downtrend. We could be looking at a serious uptrend for the indices.
45 points higher. I will go back to that fascinating number. I'm just obsessed with that number, maybe. But because on Friday, when Monday, I beg your pardon, on Monday when markets fell, it appeared that we could be in for a big sell number by institutional investors. But that's not true. For Monday, both FI and FNO, DI and cash, everything put together, the number was not bad at all. So 23rd October, 252 crore plus, 456 crore was the number on Friday. So it's not like FIs are not really behaving themselves well. I mean, they've not been rampant sellers for sure. And markets, I guess, are still nervous about the setup. The FI, FNO short, it's more short than long. Naresh, one day of selling and, chins are down. That's my only, submission here, that the market sentiment was nervous and has remained nervous. And it has now become fragile after one day of selling.
So, see, the extent of selling in the mid cap and small cap is what really scares off. And the fact that we are not very far away from the all-time highs in the mid cap, small cap index after this move. Also, we are still 3-5% away from an all-time high. So we have not corrected like the world markets have corrected. So if you look at a Russell 2000 in the US, it's down below the March lows. At the same time, our small cap index is up 30 to 35% from the March lows. So that's the difference, and that's why there is a lot of fear given the global market conditions have not been great. And on the Nifty for the last, say, almost 4 months, we've been around 19,250 at least at some point of time. So we've just been there. We've not seen a correction in a major way or a rally in the last 4 months. The hopes come up at 20,200 of a momentum to continue at 19,200. The hopes dwindle, but we are right in this band. So overall, the case is because the small caps and the mid caps have had a good rally from March lows, almost 30 to 40%. Stocks gone up a lot. There is bound to be some fear, and we see aggravated selling on a single day. We saw this happen on September, wherein we saw many stocks fall 10-15%. But we normalized over the next few weeks. It's just that we need to be more careful at current levels because this is the second shake-off move on a single day.
A lot of other stocks which are going to mean focus, and Ashisha, or rather Somit, was just highlighting as to how FMC yet again has slashed their 2023 guidance. So this is not going to spell good news for already under pressure, the likes of a UPL, SRF, the entire chemical space largely. Also, SBI cards, the new card additions was the lowest amongst all private as well as PSU players. So that's going to be another stock that we're going to be looking out for. Mahindra Logistics, and quite disastrous numbers there. They've reported a net loss of about 15.5 crore rupees versus a profit of 12 odd crore rupees on a year-on-year basis. So that is one stock as well that we're going to be looking out for in trade today. Besides that, of course, Delta Corp, look out for this one. You've been seeing some dead cat bounces on the stock of late, almost a week of gains actually on Delta Corp. The High Court has now directed authorities not to pass any final order on the show cause notice without prior permission of the court. So that's one stock which is in focus. There's Ugro Capital as well, wherein MK has initiated a buy with a target price of 425 on this one. Torrent Pharma, we just flagged off earlier in the day that Jefferies is maintaining a hold. They've upped the target price also to now 2040 from the earlier 1950 thereabouts. And, the note very categorically mentions that Torrent Pharma is not going to go out for an acquisition which is over 3x of the cash on their books in terms of size. And that sort of puts all the speculation to rest with regards to the Cipla promoter family stake. That said, PNB Housing Finance also has come out with its numbers, and a decent one at that. The PAT is coming at 383 crore rupees, and that's an uptick of about 46% on a year-on-year basis. So these are a bunch of stocks that we're going to be looking out for. But Naresh, I don't know how closely you've been tracking Delta Corp, because that surely has been giving off some amount of bounces. Given how oversold the stock has been, you think there's less to lose?
So over the last, say, 6 to 8 months, the developments have made people lose faith in the stock. And we've seen this over the last 10, 12 years. It's been a major disappointment. Every time the stock has started to rally, there is some or the other issue. And in the last 6 months, we've seen 2-3 big gap downs. So we saw a big gap down from 250 levels, you went to 190. Then again, we've seen say we were at 170, 180, the stock fell to 140. and the stock price is the same where it was back in 2015, 16. So right now it is oversold, but till the time there is no trigger event wherein a positive event, one cannot bet on it because there could be a long time where the stock goes nowhere. So it's not that the stock is not oversold, but the fact is after a 20% uptick on some positive event, one would be better off buying rather than now.
Okay, meantime, you've also got some of the stocks like Nestle, which are on the brokerage radar. You've got Macquarie, which has maintained a neutral, and they've got a target price at about 22,700 on that one. We'll be discussing some of the stock brokerage notes, but that's the pre-open ticks coming on your screen. And for now, it's absolutely flat. So holding out around the 19,280 mark. And when it comes to the Sensex as well, up about 50 to 60 points. But it'll be more critical today to watch out for what happens with the broader markets, given the kind of meltdown we witnessed Monday. Let's find out those mid-cap strategies then from our chartists. And Kunal, what's popping up on your radar today?
So I'll suggest a buy on Voltas. That's a stock which showed good promise on Monday. The stock managed to bounce back from its 50-day moving average as well as a crucial support in terms of the levels of 800. So keeping 800 as a stop loss would suggest a buy with a target of 860.
Right, Naresh, what's on your mid-cap list?
So that would be a buy on Kaveri Seed. The stock has been showing good strength over the last few weeks. The breakout done above 580, 600, made a move towards 680 odd levels. Last 3-4 sessions, the stock has been volatile, but the bias has been positive. Expecting this breakout to continue higher. A stop loss at 620, target price of 700.
Okay, there you have it. But it was just talking about, those fresh brokerage notes as well. And Pankaj, a note coming out on Nestle by Macquarie, talking about a little more clarity that's needed on near-term demand, their timelines for commissioning capex plans as well. What's been your key takeaway from the FMCG earnings? How have you looked at Nestle?
So I think overall FMCG earnings have been on expected lines. We don't expect much of a magic to sort of happen in terms of growth rate. Valuations are quite rich for most of the players. I think this segment did entirely well when a lot of segments were sort of underperforming. And I think with growth being expected in high single digits to mid single digit, I don't sense that most of the FMCG names outperforming the market. So which is why you would not see any active recommendation coming from us on this entire pack. I think they had done their job when nothing was working in the market. They did well, but I think our sense is going forward structurally one should be underweight in FMCG as an entire pack.
Pankaj, great to have you on the show. Thanks as always for taking the time out and joining in. Let's also tell you what else is happening outside the world of equity markets. And the conflict between Israel and Hamas has now reached its 19th day, marking the deadliest of the 5 Gaza wars for both sides. In fact, the United Nations has raised alarm over violations of humanitarian law in Gaza, while US has proposed for critical fuel supply to Gazan hospitals to save lives. Meanwhile, Israeli offensive continues, even as the death toll has now crossed 5,700. And big laurel for Indian Americans. 2 Indian American scientists are awarded the National Medal of Technology and Innovation, which is the highest honor for technological achievement in the United States. President Joe Biden honored top medals to Mumbai-born scientists Ashok Gadgil and Subra Suresh for their contribution in science and technology.
Meantime, Delhi once again woke up to a hazy morning. The air quality in the national capital continues to remain in the poor category. Several areas continue to record an AQI of close to 250 this morning. That's dangerously close to the very poor category. The Delhi Metro is also running 40 additional trips starting today in a bid to promote public transport. Meantime, bird flu has been detected in Antarctica region for the first time, according to British experts. This has raised concerns that the deadly virus could pose a threat to penguins and other local species and may result in breeding failure of the region's fragile wildfire populations.
Okay, Cipla, Torrent Pharma, as well as Jubilant Foodworks. Why are these stocks in focus? Here are Nikunj's take.
Look, I'm going to read a quote from Jefferies, and they said, the management has said it would remain disciplined about the capital allocation, which may not exceed 3x net debt to EBITDA, which might not be enough to acquire the controlling stake in Cipla. There's one more report which I've read, which I think mentions pretty much the same thing, that if they have to acquire Cipla and if they're giving a guidance of net debt not exceeding the threshold of 3x, that means the Cipla acquisition is unlikely to happen in this balance sheet. One. B, well, we've reported at ET now, Anurag Joshi, he's been indicating, and he in a sense has been reporting from last 2 weeks, that it's the Cipla deal is not an easy deal because of right now there is no decision which the promoter family, which is the Hamid family, have taken, and I think the Economic Times also reported the same, I think on Monday or yesterday. So looks like the Cipla deal is not going at the pace at which markets were anticipating or expecting, and if you read in between lines, I mean if you count the tea leaves, maybe that's a hint which is also coming from Torrent. Independently, if the Cipla deal goes through, well, in the near term, it of course will have a problem in terms of where the leverage would move, how can they really consolidate this kind of a large acquisition, what kind of structure are they following, because they've already given a net debt guidance. If the deal does not go through, let's assume that Torrent tried something, the deal did not go through, then independently, how do you value the business? Well, independently, I think Torrent is doing great. But valuations for Torrent, something like 30 times 1 year forward, 20 times, 25 times 2 year forward is not exactly very cheap. So I think Torrent is a stock where in the near term, the news volatility could be high, valuations are not that attractive, but I think it would be a steady compounder going forward if you take a slightly longer term frame, because the triggers in the pharma space, at least in the short term, I think are largely with, let's say, a Sun Pharma or a Glenmark because of the repair of balance sheet, or even for that matter Lupin, because the product profiling in the US market is strikingly different.
Okay, let's move right on then. What are the top index calls this morning? What is it that our chartists are advising by way of positions on the Nifty and the Nifty Bank? Well, looks like it's leaning towards a no trade, though sell on rise is Santosh's take. We're monitoring what's happening across the globe, the trend of the market as well, before taking any decisive decision on the direction of the market. And that really seems to be what our chartists are advocating as well, with a no trade recommendation as well on the Nifty Bank Index.
Well, let's get the real strategy on the Bank Nifty more than the Nifty. Nuresh, how would you approach the Bank Nifty now?
So no trades now, waiting it for it to stabilize. We've broken that 43,500 mark, which was holding on for the last many months. We saw 2 days back also a sharp recovery after testing those levels. So for now, that 43,500 is where I would be watching out. If we start again going back above 43,500, 600, then could start looking at a long position. So as of now, stopped out on the Nifty and the Bank Nifty. So waiting it out. Technically, does not look like a major sharp correction because the constituents don't look similarly bad. The constituent structure on the Bank Nifty is very varied. You have HDFC Bank at the lower end of the range. You have Kotak Mahindra Bank at the lower end of the range. ICICI Bank has started correcting from the top. So these are the major weights. So overall, waiting it out, too early to take a reversal, but would wait above 43,500.
Bunch of other stocks, and in fact, let's flag off some of those and show you how they're currently panning out in the pre-open rates and where they're headed. Torrent Pharma definitely is one stock that we're going to be marking and showing you where it's currently started off in trade. There's, of course, a whole host of other stocks as well. Torrent Pharma has started off in the green. There's Lupin. They've got the US FDA not for one of the tablets, which has a market size of $43 million. There's, of course, Reliance Industries too. There are reports indicating that the company may be nearing a deal to buy Disney's India operations. So hopefully that should finally wake up some move on the stock, not quite. 0.5% lower is where it still is. Oil marketing companies, crude has seen quite a significant cool off in the last 2 trading sessions. Brent is in fact back below the $90 per barrel mark. So look out for what OMCs do. they're definitely seeing a bit of a bounce coming in. There's Delta Corp as well, wherein the High Court has asked the DG GST not to pass final orders of the tax notice. So that's also seeing some bit of relief. Almost a 5% move actually coming in on Delta Corp as we speak right now. This PNB Housing, wherein the gross NPA has seen a reduction, a significant one at that on sequential basis. There's KRBL, LT Foods, reports indicating that the government may be actually cutting the minimum export price for basmati rice to now $950 per ton. So that's another stock which is going to be in focus. Of course, there's Ugrow Capital as well, wherein MK has initiated a buy, target price of 425. And on the flip side, there's Mahindra Logistics, wherein the net loss has now come in at 15.5 crore rupees versus a profit in the same quarter last year. Mahindra Logistics will just come up for you on your screens. That could be a disappointer, of course, in trade today, as would be the case with SBI Cards too, wherein the new card edition was the lowest amongst the private as well as the PSU players, though SBI Cards is not really facing the heat from any of that news flow. Let's just revisit some of the movers from Monday as well. LTIM, remember the metals pack was the one which was the most beleaguered and really dragged lower quite a fair bit. So everything from Hindalco to Tata Steel to JSW Steel, they were all big laggards. But right now, you are seeing a bit of a bounce come in on most of these names. Kunal, just looking at the individual components, and I know these are just the pre-open rates. We get to see whether this gets replicated when the market kickstarts. Seems like today we will see a respite and relief on the screen.
See, I think it would be a difficult first couple of hours because that will be adjusting towards the risk in terms of the portfolio. So I think once that gets settled out and if the global markets sustain, I believe that the second half of the markets could be a lot more better than what we've seen at least over the last couple of days. So my anticipation is that in case if we just hold on to that 90,300 mark, even by the mid-session, I think the second half could be a lot more better than what we probably were seeing on the opening front on the indices right now.
All right, just about a minute and a half to go to the market open. We'll be watching out for all of those individual stocks and just going by what the rest of the globe as well threw up this morning. I think it's going to be critical to really monitor which sort of what the undertone of the market is going to be basis the global events. For now, it's an okay start for the pre-open rates or even for the global markets, but no decisive move on the upside. So perhaps reading into the fact that we did see that rout taking place in the broader markets, that's going to be critical to watch. And even for the frontline index, the biggest one-day fall that we witnessed on Monday's trading session in the last 7 months, the fact that we were below the 100 DMA for the first time in the last 5 months. The yields as well seem to have settled after crossing that 5% mark. But keep an eye out then on those individual constituents, whether or not we're going to see new leadership as well within the banking space and those newsmakers as well as the earnings impact, Ayesha. All of that will be very closely watched out for in the market open today.
Oh, yeah, absolutely. Whether we see a breach of Monday's low, whether we're able to hold on to 19,300 or not. Kunal, just very quickly before we ring the opening bell, what's the sanctity of the breach of 19,300 and how critical is it to support that mark today?
I think it's a very important level because this earmarks the index to go back to the 5 month, 6 month swing lows, and I think that could be a more important level to watch out for. So 90,300 is a very important support for the index over the near term.
Okay, a critical mark. 90,286 is, where we shut shop in Monday's session. Right now, at least on the first tick, we're just about defending that mark and just trying to keep our head above water. But it's a very feeble start. Let's see whether we can, gain some strength here. The broader markets, of course, are seeing a better respite. The small cap index is now higher by over 1%. The mid cap index is holding out by about almost 0.5% or so. The big boys are supporting the market. Adani Enterprises, HDFC Bank, nearly a 1% move coming in there. Tata Steel, the big beaten down one from Monday, that also is seeing a bounce, as is the case with LTIM too, given how sharp the fall was on this stock in Monday's session. Let's also revisit some of the other names from Friday, the likes of an IndusInd Bank, which cracked about 2.5%. There was Tata Motors as well, which was a big drop. Similar was the case with the most of the IT names as well. TCS, Wipro, they all fell pretty hard. L&T was down. And today you are seeing green on most of these names. Within the broader end of the market as well, Hindustan Copper, Laurus Labs, India Cements, these were big drags in the session. Now I want to address what the newsmakers are up to. Let's see what Torrent Pharma is up to. The India business revenue is up 18%. The US revenues, though, are below estimates, standing at about $30 million. Torrent Pharma holding up at 1,900 per share, 1.25% of an uptick coming in. Lupin, after them getting the US FDA nod for fluconazole tablets, the market size of about $43 million. Look out for that. Let's see what Reliance Industries is up to. Reports indicating that they may be nearing a deal to buy Disney's India operations. Very tempered move on Reliance Industries. Delta Corp, after the High Court asked the DGGST not to pass the final orders on the tax notice, 6% of a gap up coming in, all Delta Corp as we speak. And then PNB Housing should be reacting to its earnings as well. The gross NPA has seen a reduction all the way to 1.78%. There's also Ugro Capital. MK initiated a buy with a target price of 425. And on the flip side, of course, the disappointment is coming from Mahindra Logistics on its earnings, from SBI Card with regards to the new card additions, and then UPL and SRF as well, wherein the FMC yet again has slashed the 2023 guidance, and that's not going to spell good news for the sentiment on both UPL as well as SRF, although both of these stocks have started off mildly in the green as we speak.